two major history-making events this week will either set a dangerous precedent or will play out properly as it should. First, we have the President Sona, which will tell us more about the future of online gambling. Then hopefully followed by the PSE's announcement for the index rebalancing this August. Will Plus be included or not? RCR or AP could take its place. Let's discuss. My name is Den Slim and welcome to another episode of Monday Market Outlook. Earlier in the week, Trump announced a massive trade deal with Japan with 15% tariffs. This sent the S&P 500 to all-time highs. U.S. stocks climbed on Friday, marking its fifth consecutive record high of the week, and the Nasdaq also reaching new all-time peak. And with the busy week ahead, many investors may be taking profits in advance of key events, including the Federal Reserve's two-day policy meeting, the core PCE report, and the U.S. monthly jobs report. And a wave of earnings releases from major companies like Apple, Amazon, Meta, and Microsoft. Now, topping it off is the looming August 1 deadline for countries to finalize trade deals with the U.S. or risk facing reciprocal tariff increases. So far, the S&P 500 and the Nasdaq has lived up to its mid-year rally trend, with both indices up 3.7 and 3.4% month to date. Now, meanwhile, the trade deal between the U.S. and the Philippines took a backseat with all this news. The Philippines managing a 1% reduction on tariffs, while the U.S. will have zero tariffs on certain goods and U.S. automobiles. Now, this trade negotiation, however, did manage to strengthen ties between the two countries and was positive for the markets. The index managed to rebound from our last line of defense and avoid a further dip into the 6,200 level, ending the week above 6,400 along the 20-day EMA. So what happens next, what happens this week, is the subject of many conversations online and offline. As President Marcos prepares his Sona, attention turns to both his past performance and the upcoming legislative agenda. So we may finally hear some news on the Conectado bill, which will affect our telco stocks. But I know most investors are waiting for what the president will say about online gambling. Now, remember, President Marcos back in 2024 announced a sweeping ban on all POGOs. But for this year, Malacanang has said that Marcos is thoroughly reviewing the proposal to ban online gambling and will not rush to a decision. But of course, the question is, has he decided yet, and will he announce a ban on online gambling this year? Now, let's first consider the background on this issue. Online gambling in the Philippines operates under two major laws. Presidential Decree 1869, which was created in 1983. This presidential decree created PAGCOR, granted it a 25-year license to establish, operate, authorize, and license casinos, clubs, and other centers for games of chance, etc. And it allowed PAGCOR to regulate and earn revenue for the government through gambling. Right? So this 25-year license, of course, expired in 2008, and this was renewed for another 25 years under the Republic Act 9487. This Republic Act further defined PAGCOR scopes and limitations, but most importantly, this modernized PAGCOR's powers to adapt to new gaming formats like online casinos and e-games, which includes platforms like Bingo Plus. So as it stands, DigiPlus is fully licensed and operating legally under these two laws. Now, most of the conversations I've heard seem to be implying that the president can ban online gambling outright, similar to what happened with POGOs and e-sabong. Now, but the key difference is that these two were established administratively by PAGCOR. In other words, there's no specific law that backs them. E-sabong operated under PAGCOR's authority as part of a regulatory innovation. So it was like a test, right? Similarly, POGOs were launched through PAGCOR's internal guidelines, not through congressional legislation. And on top of that, I mean, POGOs are offshore gaming operators that serve foreign players, so it doesn't need a license. So which makes these two easier to phase out. Because their legal basis is administrative, not legislative, the president can quickly suspend or ban them through an executive order or a directive to PAGCOR. So there's no need for Congress for these two. Now remember, for the president to ban POGOs and isabong, the executive order needs to be backed by police power justification. Now there's such a thing as police power of the state, which is a constitutional power allowing the government to restrict certain rights or businesses to protect national security, public morals, public health, public order, and basically safety of the general welfare. Now, because DigiPlus operates under a legislative license, right, the president can't issue an executive order this time around to ban DigiPlus. Now, the president can only urge Congress to pass a bill, which means that the online gambling will be included in the legislative agenda as a priority bill, but it does not change existing laws or affect current licenses. The bill still has to become law for it to be affected. So let's look at three possibilities for the Sona this week. The first possibility is that the president doesn't say anything about it. So Plus continues operating business as usual. But the silence of the president in the Sona may also just mean that the legislative threat to DigiPlus isn't urgent. There's nothing preventing it from being discussed further by lawmakers, which is, still a good thing for DigiPlus. Now, the second scenario would be to call for tighter regulations. For example, stricter age checks, limits on marketing, disconnect from e-wallets, higher limits, or a much tighter crackdown on illegal gambling sites, which actually might benefit DigiPlus and legitimize the sector because it signals reform and not a shutdown. Now, the third scenario is what most investors are watching closely. Now, if the president declares that online gambling is harmful and urges Congress to ban it, then it will become a priority bill. But let's be clear on that. Even if the president pushes for a ban, DigiPlus and other online gambling platforms will continue to operate until a law is passed, which could take months to more than a year, and we don't know what the final law will look like. The nuance here, a lot of people, again, still think that similar to isabong and POGOs, the president can invoke an executive order and shut down online gambling instantly. But again, online gambling is licensed under a national law, so any executive order will definitely be challenged and may not hold. The president, of course, will avoid the embarrassment of compromising his Sona on something that can be challenged. So the Sona is going to happen after the Monday market. So we might see a huge sell-off on Monday as investors avoid this uncertainty. If he calls for a total ban, of course, panic will definitely ensue the next day. But for the brave, right, this could be an opportunity to buy the dip before people realize it's not yet game over, because without a law, online platforms and DigiPlus will continue to operate. What the final law will look like is another discussion, right? So it will be a very volatile week for DigiPlus. Now, this whole threat of legislation has also brought about a lot of speculation about the eligibility of Plus to enter the index. A lot of people has referenced certain parts of the policy on index management, but you cannot take each clause separately. So it's convenient for you to push your argument. You have to take the whole policy on index management as a whole. Now, first off, let's check this section here, review dates. In this case, what it says here that the second review covers the period of July to June, right? So it's straightforward. The review period ended. So whatever happens after that doesn't count. What are we reviewing during the review period? We are reviewing who will be added or deleted from the index. So here are the rules for insertions and removals. Now the rules are designed to provide stability. When we say provide stability, this does not mean stability of the price action of the stocks, right? So the rules for the selection of constituents of the PSE indices are designed to be stable, which means that this should not be arbitrary, and it should not be subject to any changes. It should be stable. Now, the index will include or exclude companies which have risen or fallen significantly. And what does risen or fallen significantly mean? These are defined in the next section. The index relies on a ranking system, and it states certain ranks you need to achieve to get in, or a rank that will disqualify you from the index. What happened to Plus this July will be part of the review period for January to December for the rebalancing next Feb. So whether Plus can stay in the index in the next rebalancing is still not set in stone, because there's still 5 months of the next review period left. So Section 4, however, could theoretically be used to justify non-inclusion of Plus to the index. This clause is deliberately broad and gives the PSE Management Committee discretionary authority. But what does reliable price mean, right? In a stock market sense, unreliable pricing refers to like trading halts, illiquidity of the stock, or wide bid-ask spreads. So, but in practice, this is rarely invoked unless something exceptional occurs. But can this legal challenge to Plus be considered something exceptional? For me, Plus remains a legally operating company licensed by PAGCOR. A priority bill by the President must go through Congress. And during that process, it can be revised, it can be delayed, it can be watered down, or even vetoed eventually. We do not know what the situation is a year from now. So until that law is enacted, for all intents and purposes, Plus still meets the existing inclusion criteria, and I believe the PSE will follow the guidelines, no? Because excluding Plus on the basis of political pressure would be a dangerous precedent which will erode investor confidence in the index's integrity. Now, rationally, I think the President at the most will just call for tighter regulation for online gambling, which will be in the form of PAGCOR guidelines. Now, all this, of course, is assuming that our leaders actually follow the law, right? Because a lot of people believe that for these people, the law is meant to be broken. I mean, just joking, right? But, you know, political forces sometimes find loopholes or interprets loopholes to justify their actions. Because if you think about it, what happened to Plus, all this just blew out of nowhere. It all started when the senators and congressmen had their oath taking, and suddenly they came up with their priority bills, which included a ban on online gambling. And you know what happens after the elections, because you know what happens before the oath taking, lobbying is already taking place for the position of Senate President and Speaker of the House. And if you look at this article, right, apparently there is a manifesto that is for signature, no? Manifesto in support of the Speaker's re-election. And apparently, I mean, I don't know what happens behind closed doors, but I'm curious because according to this article, there are those who did not sign this manifesto, and it also seems to suggest some challenges to the speakership from a key personality from DigiPlus. I don't know, but let's look at the charts. PSE pulled back on Friday after surging 2.3% before the sell-off reduced the gain to 1.7%. So we have the gap fill here at 64.60. The retracement hit the 0.38 fib here, but bounced off to end the week above the 6,400 level. So the best case scenario for the PSE is to form a higher low here and move back into 65.40. Some stocks I want to highlight this week. So we have SMPH and Mega World, no? Which shows some improvements in their technical setups. Here, SMPH holding at the 2330 level. Best case scenario will be for SMPH to overcome this resistance, which will give it a measured target of around 29. MEG also forming a golden cross. It dipped twice to the 20 EMA, bounced off of that. Levels to watch out for: 209, 217, and 223, and 235 for Mega World. So far, it looks like it has bottomed out at 173. Now, RCR rallied, no, on speculation of its potential early inclusion to the index, but insiders may know something otherwise, because after trapping investors over at 8 pesos, RCR sold off. Now, FIBO retracement levels here puts it close to the 61.8 fib. This level, 758, could be a good chance to enter. The dividend yield at this level may be around 5.3%. Still not bad, right? So next we have Wilcon. Wilcon rallied by as much as 16% actually before the Friday sell-off. Same setup with RCR. It retraced to the 61.8 fib, bounce off of that. So could be a chance to buy Wilcon. Wilcon has showed signs that it has bottomed out, double bottom here. We made a swing trade, entered at 714. So currently the trend is our friend until it bends. Strong resistance here at 1050, but at this level, the potential, if it breaks out to 1050, look at that, clear skies all the way to 13 pesos. So congratulations if you were able to follow this swing trade. So the Conectado bill will be highlighted in the Sona, but I think the negatives have already been priced in for the telco stocks. Globe dipped as low as 1624 before rallying back to 1690 and a pullback again last week. Not the best looking chart, but the MACD here shows a convergence, so it's a good sign that it may be already bottoming out at this level. 6.1% dividend yield every quarter. A push above 1750 would confirm the reversal and would be bullish for Globe. TEL looking much better. We mentioned in the past episodes that this would be a good chance to buy TEL with a 7.97% yield. Congratulations if you were able to do so. It seems to have reversed. It hit the 200-day EMA, could dip into 1285 or the 100-day EMA 1275, and a good chance to buy at these levels. The yield at these levels around 7.4. So congratulations if you were able to get that. Converge looks more stable at these levels. Could be a good level to buy if it holds. So we have the telco and internet stocks with early signs of reversals despite the fundamental challenges. So as July is almost over, have you done your shopping yet? We've been highlighting our trends with benefits list for the past 2 weeks, and hopefully you were able to pick up some good names, as July is the best month to buy stocks with an average return of 2.5% over the next 6 months. And if you missed the boat, August is the second best. So watch out for those bargains. And one potential bargains here with the index rebalancing looming in August. Most stocks that are booted out of the index tend to perform well 3, 6 12 months with an average return of 3.5, 9.2, and 11.6%. And look at this, right? Bloom, when it was included in the index, underperformed, and this caused it to be booted out of the index. Look at the performance here, 105%, 105%, which included it in the index again. It underperformed again, booted out of the index, and look at the gain here, 71%, which again made it eligible for the index. It underperformed again, and it will be booted out of the index this rebalancing period. This could also be a good chance to buy Bloom, right? So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.